Now we're going to move on to a discussion which is more focused on the business side of this. It's why are institutions adopting crypto at all? What are the key drivers for the adoption of crypto in institutions? And we have Irfan back as the moderator of this panel. So, as you said, a nice segue from your earlier discussion into the business side of things. You should come up.
Good morning again. I won't bother introducing myself. You probably know me by now. I'm here joined by my esteemed panelists and fellow digital asset ecosystem participants, Timo, Henrik, Neil, and Kelvin. So we are here to discuss the key drivers for institutional adoption for crypto. Now, I will not insult your intelligence. This is a panel that you have likely seen before. This is a much discussed topic, and that's largely because of its importance and the dynamic nature of the way in which digital assets are being perceived, both from a regulatory point of view, but more importantly, as far as this panel is concerned, from an institutional adoption point of view as well. So I'm gonna try and lead off with introductions and questions at the same time in order to be able to help us define the scope of the conversation today. So firstly, Timo, if I could start with you, if you could help to define the spectrum as far as digital assets are concerned to help us frame the conversation for today, and also introduce yourself and the company that you represent.
Right. So Timo Lehes, I'm a co-founder of Swarm. We're a permission DeFi platform currently set up out of Germany under BaFin regulation. And it was interesting. So the way that BaFin approached this was basically by saying, we're going to define digital assets basically as financial instruments. And so what that meant was that if you're going to be involved in any kind of activity related to custody or trading of financial instruments, then you need to have a license under BaFin. So that was the outset on the premise under which we set up our company in Germany. And this was in 2019. We moved it from California because we couldn't figure out what the SEC wanted or did not want. So we thought that would be a better place to build not only like a very credible jurisdiction, but also post-Brexit, it made a lot of sense to actually find like the biggest market in Europe and set up shop there. So the way that they look at it is basically to say, you know, digital assets being payment tokens, utility tokens, cryptocurrencies, Bitcoin, it's all financial instruments. And then also extending that into the security space, if you basically trade securities on any kind of blockchain infrastructure, then we basically treat them all the same. So it doesn't really make a big difference for us whether we're trading wrapped Bitcoin against a tokenized Apple stock or something else. It's kind of all the same from a process and kind of a regulatory reporting point of view.
Yeah, and that's super interesting as well. So that's very helpful in terms of framing. Henrik, could you take the conversation a little bit further and talk about what we mean by institutional investors? Because as far as I understand, the way in which crypto broadly being adopted by institutions, that started really with family offices and hedge funds back in kind of like mid-2015, 2016, that kind of time. But could you help us, for I guess, for the purpose of this panel, help us define what you mean or what you understand to be institutional investors?
Yeah, sure. First, I'm Henrik Andersson. I'm the CIO of Apollo Capital. We're a crypto fund based in Australia. We've been around for around 5 years now. We run long and market-neutral strategies. So when it comes to, I think, institutional investors, I think you're right. This is the space that started with retail adoption, and then it sort of grew vertical from that. So we have seen an adoption from kind of family offices, boutique institutions, and we have kind of institutional type of players in the industry now. So we have organizations like Fidelity being involved. We have institutional type of market makers in crypto these days. We have investment banks writing research reports on crypto. So that's sort of where we see adoption today. When we speak to institutional investors, I think we really mean investors that has an investment committee, compliance team, and all kind of things that do due diligence like they would do on any other asset class out there.
Yeah, that's really helpful. And in terms of the infrastructure, Neil, if I could turn to you and just kind of help define what we mean by institutional grade infrastructure when it comes to the importance for institutional adoption, and then a little bit of background as to SIX, SDX, and ADX.
Sure. Hi, I'm Neil Thomas. I am the regional head of APAC for SIX, which is the Swiss Stock Exchange Group. Also just transitioning actually into one of our new ventures called Asia Next as the Chief Commercial Officer. SIX is a financial markets infrastructure, so we are the trading, clearing, settlement, custody for the Swiss domestic market and actually the Spanish as well. Well, back in 2018, we kicked off a venture to established the SIX digital exchange, so kind of trying to make sure we future-proof our business and didn't get disintermediated by the DLT industry. We've now fully live, fully regulated, issued products in that environment, 150 million digital bond and a private equity issuance happened earlier on this year. We are now then expanding our footprint as sister exchange in Singapore called Asia Next, which is building an institutional grade cryptocurrency, digital asset and digital alternative exchange based upon the foundations of what institutions are looking for. So SIX as a group is owned by 122 banks, so user-owned, user-governed. We're kind of instructed of what the market wants to do, what they're looking for from an institutional basis. The things that really matter from an institution and from an infrastructure perspective is really GRC, governance, risk and compliance. So every time that I sit down and we meet with a team in a tier one bank, they don't just sit down with the head of digital assets or the head of crypto, who are the guys I really want to speak to, but they also come with their risk manager, their compliance teams and say, okay, how do you tick these boxes for us? So a lot of the work that we do is really understanding what are the boxes that you need to tick and to ensure that you're compliant with your regulations. So for us, institutional is, you're regulated and you've got a compliance activity that you need to make sure you meet. So we really build to those factors, looking at what you need from from market infrastructure right through to your regulatory requirements, and then like what's best practice. So what are the principles that you already adopt today within the Swiss exchange? How do you transpose that into a digital asset and crypto venue?
Yeah, that's really helpful. And I think the other thing that probably needs addressing now is the actual underlying asset itself. And I think Kelvin's more than capable of being able to kind of underline what the principles are as far as asset allocation, portfolio construction. And that'll probably be the last composite piece of this discussion today and helping to frame it. So Kelvin, over to you, a little introduction and around the asset allocation piece. Thanks.
Yeah, great. Thanks very much. So I'm Kelvin Ko, one of the co-founders of Spartan Group, and I manage our asset management business. I had, prior to starting Spartan Group, spent 20 years in the traditional world of finance, or traditional finance world. I was in Goldman for 18 years and was a top-ranked oil and gas analyst in Asia, and then went on to lead Goldman's investment research team, and then subsequently worked in a hedge fund. My partners were on the investment banking side of Goldman, so we really understand the world of TradFi and the standards and so on and so forth. When we came into the space in 2017, we recognized that there was a real innovation happening, but that the players in the space had no idea about how to go about raising capital, and there were very few professionally managed funds at that point. So we came into the space with the intent of bringing the Goldman standards of investment banking into the space, and also bringing all the traditional ideas of how to manage a fund. And our first fund was launched in 2018, which is a fundamentals-based long-short crypto fund, which has grown 10x in size since we launched it. And over the last 2 years, we've also had the benefit of investing even earlier into the innovation cycle, and launched two very interesting funds. One that's focused, a venture fund that's focused on decentralized finance, and then subsequent to that, a newer fund that's focused on the gaming and metaverse space, where we're starting to see a lot of interesting innovations and game theory dynamics coming into play. So we like to think of ourselves as being very crypto native, but at the same time having been trained for over 20 years in finance, bringing those standards into the crypto world.
The John Nash of digital assets, I like that. So maybe if we can kick off, the three areas that we've really kind of identified that we want to double click on are regulation, market infrastructure, and then the place of digital assets within a portfolio. And we're very fortunate enough to have two CIOs on the panel who are eminently qualified in order to be able to delve into that. But maybe if we start with the R word, that seems to be a perennial issue across every single panel that I'm sure these gentlemen have been on and discussing, so I'm sure this is something that they're very well versed on. First question, is the framework for crypto sufficiently clear across important TradFi jurisdictions? And I'm going to open that up to all of the panel because I'm sure, given your various different experiences across the jurisdictions in which you operate, this is an important aspect for your consideration for your businesses to grow. So anyone who wants to kind of jump onto that, please feel free.
I'm happy to start. So I think there's, perhaps for institutional investors, there are, I think, two main kind of questions when it comes to regulation. I think one is custody. There's still some uncertainty, I think, around regulation for custody. If you're doing a retail offering, what kind of custody do you need? Do you need the private keys to be onshore versus offshore? Those kind of questions are still being worked out, at least in some regions. The other questions is really around the instruments, what are considered securities and not. And there are still a lot of uncertainty in that area that I think would be good if it was clarified. So even for the second largest instrument in the crypto space, Ethereum, moving to proof of stake, does that have any implication for it being a security or not? Those kind of issues are still kind of out there. And then more kind of crypto native, there are still, I think, question marks around DeFi and stable coins and those kind of things. So I think that's sort of where we are today.
Well, I think Gary Gensler would probably suggest that Ethereum should be considered to be a security now that it's moved from proof of work to proof of stake. But that's an interesting debate. I'm not sure whether you have enough time to kind of go into that. Is the current level of regulation appropriate? Do we need more? Do we need less? Is there a calibration that's required from the market and also our regulatory authorities to help further define this?
Sorry, Timo, happy to give a kind of my quick view. So I think there's two sides to it. One is sort of the conventional wisdom that more regulation will make institutional investors a bit more comfortable, and I think that's definitely true. And I think there's a flip side as well where you don't want sort of regulation to stifle innovation. So I think there's a real risk for that, and probably the biggest risk as I see in the crypto market today is that they're overreached by regulators. We've seen, I think, regulators in the States take action against smart contracts where they have basically blacklisted smart contracts. Those kind of things that I think took people by surprise in the industry. So we don't want to go down that path. I think that's extremely important to be able to kind of keep the innovation happening in the space. So that's kind of the other side of that. Sorry, Timo.
Yeah, no worries. Yeah, I think, well, calibration is kind of a nice word. I think sometimes you kind of need a sledgehammer to kind of beat things into the right direction. I think we've seen in a lot of the drafts for Mika, for example, that there were some really silly ideas in there. And as they have collected feedback and, they have actually course corrected. So I think that's a positive evolution in general. Now, whatever the SEC is doing or think they're doing, it's very hard to kind of have any kind of constructive views on that. I think that's going to play out eventually. And there's so many kind of stakeholders and conflicting interests that are, and also the way that the US operates with lobbying and all the rest of it. I think it's a very complicated environment. And you can't really, I can't predict anything about what's going to happen there. We just decided we couldn't build a regulated secondary liquidity venue using native blockchain settlement in the US because it's impossible from a reg point of view. The other complexity that we found is that whenever you have like a global project that's trying to do something at global scale, so being that a big brand or a global company of some sort that wants to do, let's say they wanted to do a, you know, a royalty token for something, right? With a kind of a global implementation, it's really hard to do that, like across the various jurisdictions and figure out like how you would need to file and implement that from a regulatory point of view. So I think those things are like, you know, a few years out before we can actually build those in a kind of a constructive and if, let's say, straightforward way. So.
Yeah, and that's important as well. So maybe just to kind of like round out that particular piece, what are we waiting for as far as prudential regulatory authorities are concerned from a licensing perspective in order to be able to draw further adoption on this? And I might go to the far end of the panel to kind of start off on that, you know, as being kind of practitioners, both from an infrastructure point of view and also looking at what the fundamentals might be for further adoption.
Yeah, I mean, I think, yeah, I think we're all sort of frustrated, right, about the lack of progress from a regulatory perspective, and the messages coming out of the SEC has at times been confusing, and they've also tried to take a very sort of enforcement-heavy approach to it, and that's obviously not conducive for innovation in general, because nobody wants to go in and talk to them. But at the same time, I think if you look at the conversations that are occurring in Congress, if you compare the sophistication of those discussions today, I know it's still quite low, but relative to where they were 2 years ago, it's a step change, right? So I think people are starting to understand that digital assets, you know, are an innovation. It's something that's not going to go away, and over time, we need to embrace it and adopt it. So I think there is now momentum. There's obviously some politics between, you know, who's going to actually regulate this asset class, and I think that's, you know, what's sort of causing a lot of the, you know, back and forth. But I think regulations are going to be good for the long term, right? I think in terms of, if you think about consumer protection, after everything that's happened this year with, you know, the lending institutions sort of going belly up with 3 arrows and so on and so forth, I think it's going to be very important. And I think if you think about institutions coming into the space, it's absolutely critical, right? Because, you know, we talk to the guys back in my old firm, Goldman, all the time, and they've got a team now of, what, 50 over people working in this space, and they have no products to offer their clients because they can't touch the tokens themselves. Yeah, so everyone's waiting, but the conversations are definitely happening.
Yeah, and that's important. So I mean, I saw some news that Goldman's were kind of dabbling and had launched a private fund, I think, that had exposure, but I don't know whether that's, it sounds weird to say physical exposure when you're talking about a digital asset, but I think that's kind of on the cards, at least anyway. So look, the next area, and again, regulation is something that we can probably talk about all day, unwillingly. But I think that the next item is incredibly important as well, and I think I'd like to move to Neil to talk about the infrastructure. You know, it's really important that the apparatus that is there for institutional investors is fit for purpose. It's been tested from a battle perspective, and also provides the appropriate nuances which the asset class demands. So I'd love to hear a little bit more about, you know, SIX and, you know, the new venture in Asia, and how you're looking to address that for institutional adoption.
Yeah, no, thanks. So I think we start from a principle that we come from an institutional background. So if I look at the makeup of our organization, you know, our CTO was 25 years in MAS, right? So he really understands what, from a regulatory perspective, what's going to work from an infrastructure. What do we need to build to make sure that actually, you know, when we go and see, you know, once you're PSA regulated or get your RMO licenses, all these things, that you're really adopting to the standards that they're going to drive. Our CEO is also from, you know, long-term investment banking background, so the people in the organization understand what institutions need, and having that crossover, you know, between the two industries is really important. So we look at it that we're more institutional, bringing crypto offerings to the market that way. So I think you described earlier that crossing the Rubicon into, we don't really look at it like that. We look at it as if we're drawing the products towards us, and then we're adopting all those principles and values that you have within a, like, you know, in a domestic exchange, like the Swiss exchange or the Spanish exchange. So when it comes to that infrastructure, we're talking about the plumbing that banks and financial institutions already use. So things like fixed protocol, right? Using the same messaging services that, so you don't have to rewrite everything. I mean, there's been some well-documented cases where people have tried to insert blockchain into the middle of existing processes, and it's not worked out that well. So you don't play, everything we do in the SIX group is done outside of the traditional environment, right? We don't play with the reactor as such. We just don't experiment there. And when it comes to things like, okay, so what's the governance? What are the standards that you need? So do you segregate funds, for example? So do you look at market surveillance? Are you making sure that the KYC and AML meet the exacting standards that we need? So they are the core fundamentals that everybody really wants to build into an infrastructure. And then what products you bring in is if your infrastructure is based upon those principles, it doesn't matter as much. Clearly, there are going to be changes and slight differences, but at the core build, it reflects what you already do in a domestic world. But with the advantages of the DLT technology, so we can get rid of things. Atomic settlement I talked a little bit about yesterday, but you can create huge efficiencies for the banks. Getting rid of the clearing settlement process, T0, right, or atomic, is huge cost saving for the bank. There's big efficiencies there, and that's one of the big drivers towards this as well. I know we're talking more crypto-led today, but it's making it a safer asset class for them where we can.
And in terms of the composition of the way in which market infrastructure exists today, I think I'd noted in some of the notes that I kind of pulled up for this that there are 200 plus so-called institutional grade market infrastructure exchanges. So it seems like the choice of venue is growing in terms of number, and that might create some fragmentation as far as the infrastructure is concerned, which could be of benefit depending on the strategy that you employ as far as an allocator. I think the idea of arbing is very much real, and I'm sure lots of our kind of institutional investors are looking to try and take advantage of that. But is there a case for consolidation? And what are the pros and cons, I guess, of centralizing these types of infrastructures in the future?
So I think liquidity fragmentation is generally not great, right? Because people want best price possible. So if you can create, there will be a consolidation. You already see it in traditional stock exchange space, right? So, I mean, SIX bought BME in 2021, the Spanish exchange group. You see massive consolidation. Will that happen then within other exchanges within the digital world? Absolutely, I do think so. It's not there. It will be a part of the maturation of the market. For us, we really see our position is creating global over time, and there's a lot of questions. I probably don't want to open up Pandora's box to this, but there is global liquidity pool. So how do you then find exchanges which operate off similar principles which can then join around the world? So we're trying it bilaterally with Singapore and Switzerland. How can we connect between the two? So we vest here, and we'll do that in other countries around the world as well. But it's creating an environment where you can move assets around, which creates that liquidity, and that maybe comes through collaboration. Understanding that there won't be one player who owns it all, right? But we have to kind of have a collaborative mindset so that we can share liquidity to benefit ultimately the institutional investors who can cover things like local regs, or particularly regs, and then we find interoperability where we can.
Yeah, and that's probably a good lead-in in terms of we're very fortunate, as I mentioned earlier, to have two CIOs on the panel, and we can talk to the way in which what is the place of cryptos in portfolios more generally speaking, and what are the instruments that you've seen developed that are now present on some of these infrastructures that will allow for you to then gain a little bit more comfort to cover your exposure to these types of assets in the future. So maybe Kelvin and Henrik, maybe this is a head-to-head debate on this topic here.
You want to go first?
Yeah, so when it comes to asset managers like Spartan and Apollo, I think one of the key sort of infrastructure build-outs we have seen in the last few years is the custody piece. They used to be the biggest barrier to entry when it comes to institutional adoption of crypto assets, and that has seen a huge development in the last 5 years. We launched around 5 years ago, and at that point, if you want to run a diversified portfolio of crypto assets 5 years ago, there was not really an institutional solution available. So you had to deal with private keys yourself, really develop your own solutions for a lot of these things. And we have seen a huge development when it comes to that. So that has moved from kind of self-custody basically to where today you have kind of crypto-native custody solutions. You talked to BitGo before. That's one example. But there are others as well, like Coinbase, there's Gemini, and other players in that field that is trusted. And today you have the traditional financial institutions as well, like State Street, like Fidelity, like NASDAQ, like New York Stock Exchange, that are offering increasingly custody for crypto assets. So we have seen a huge development there when it comes to kind of the institutions, the regulatory kind of compliant firms that offer this kind of services, but also on the technology. So, as we heard when you talked to BitGo, we have seen a development from kind of the multi-sig to MPC. So we have seen a huge kind of development there as well. So I think that's probably the biggest kind of infrastructure piece when it comes to running a crypto firm.
Henrik, it always makes me feel a lot more safe in terms of my own profession when asset managers are speaking about custodianship and safekeeping as being a cornerstone to the way in which this market is going to develop. So at least I know that I'm going to be in my job for a little bit. Kelvin, could you help elaborate on, I guess, the place of, from an allocator's point of view, what the place of this type of asset class is for institutional adoption to take place?
Yeah, I think the custody piece, which Henrik talked about, is very important, right? And I think the other aspect of it is in terms of reporting. So when we came into the space about 4 years ago, trying to find a good fund administrator was a massive problem. And even when they were willing to provide the services, they didn't necessarily know what was the best way to go about valuing the assets. And so there was a lot of learning, right? But I'd say today that has, I think, largely been solved. And obviously reporting is important because, if institutional capital is going to come into the space, they want to be updated on a timely basis. They want to know your risk and all that sort of stuff, right? So all those tools, reporting and so on and so forth is now available. Same thing I would say with the accounting side of things. And we continue to see very strong interest from allocators to come into the space. And one of the things that is allowing us to create more interesting products is the diversity of tools that we now have, particularly on the hedging side, right? So we now have options and futures and perpetuals on most of the liquid tokens, and so we can effectively sort of execute those strategies. So I think the asset class has certainly become more interesting, more complete, and allow us to manage risk better and to offer products that are more attractive on a risk-adjusted basis to traditional allocators.
Yeah, so again, very reassuring for me that accounting was on there as well as an asset service. So that's interesting and important to hear. So it's also good to hear that the instruments are now catching up, I guess, to meet the requirements of institutional investors as they really wade into this space. Timo, let me start with you. We've got about 7 minutes left, and the last topic is the lessons from winters past. So. Looking at predictions for future adoption and what types of things might be of interest, of note, and things that we might be able to draw upon to ensuring that we emerge from this winter into a fulsome spring.
Right. So I think we already covered like the checkbox type things, like what are the things that have to be there in order to even have somebody engaged, let's say on an institutional level. But going beyond that, I think it's also really important to kind of not replicate TradFi onto blockchain, but actually like build something that's like progressive and new. And so the way that we approach that is basically by trying to maintain, obviously, the transparency, self-custody aspects, composability of DeFi, and basically hide as much as possible of the regulatory implementation that we've built, so that it kind of looks and feels as much as possible like a kind of a progressive DeFi application or framework. And then the next step of that in terms of adoption is also to make it super easy to use, obviously. So there's like the private key management and stuff like that that people don't necessarily want to be bothered with. And so then we have this partnership with Copper, who we think is an excellent kind of custodian. So what we see is like actually combining like the, let's say, the security of having like the checklist items in place, and then also like keep innovating, right? And not like, we're not out there to copy TradFi onto DeFi. Not at all. It's actually about building like self-sovereign kind of type services and do something that's new and interesting and that's like previously unavailable to the broader markets.
Yeah, couldn't agree more. And actually, there's a great adage that I'm not sure if Andreessen Horowitz had coined, but in winters we build. Like that's principally the way in which I think the infrastructure has kind of grown up. If I could go to the rest of the panelists as well and ask you all to take out your crystal balls and predict the future as far as life beyond winter is concerned. Maybe starting with Kelvin and working back to Timo. What are your predictions for the next 3 to 4 quarters in terms of further adoption, what we're likely to see, and what you would like to see in terms of maturation and further institutional adoption?
Yeah. So, as we look at the crypto markets today, I mean, we're in winter in the sense that asset prices have corrected sharply, but the magnitude of the correction is no different than what we saw in the last cycle, right, back in 2018. I think the one major difference we're seeing this time around is that there is a lot of venture capital that has come into the space over the last 12, 18 months, right? And so there are billions of dollars sitting on the sideline that are still funding these innovations. And so projects are getting funded today, right? New innovations, new entrepreneurs can still build. If you compare the situation with 2018, back then, venture funding completely dried up, right? Even the best projects in the ecosystem could not raise capital, right? And so it slowed the industry down quite substantially. So now, I think the environment's a lot better. And so the building continues through winter. And importantly, I'm excited about the fact that we're starting to see applications like gaming applications, NFTs, and so on and so forth, which really resonates with the masses. And I think over the next 1 to 2 years, we're going to see some really interesting, consumer, gaming products, come to market that has the ability to bring more people into the ecosystem.
So, are we going to see a Fortnite avatar enter the Spartan fund in the future?
I wouldn't rule that out.
Excellent. So Neil, predictions, please.
Oh, well, I don't know if it's a prediction, but it's a hope, is that we can really force institutional flow into crypto and into the broader digital economy, where we create massive market efficiency. I think there's a big amount of education which is going on from all of us, right? And just now it's time, I think you see a lot of the POCs starting to fall away, and it's real-time application being drawn onto the market. So the stuff that Six has done is live and in production. You're seeing a lot more stuff go to production. That production now needs adoption. And my wish is that the adoption is followed with the mainstream from institutional, and then we really get the volumes into crypto, and we also get the volumes into digital assets.
And Henrik?
Yeah, so I think in this crypto winter, I think I see 3 big trends, sort of. One is the underperformance of BTC. So we haven't seen that in any previous crypto winter. BTC has always outperformed in the bear market. This time it's different. And I think that has really opened people's eyes to that the market is much bigger than BTC. BTC is still the biggest asset in the crypto space. But we see kind of more use cases outside Bitcoin. And I think that's probably a reason why we see other assets performing better as well in this bear market. Second one is something that I think Kelvin mentioned as well, kind of the investments happening, especially in the NFT gaming space. So we have seen A lot of activity in the DeFi space previous years, but that is really moving into more NFT gaming space. So it's really good to see new use cases. And we definitely expect that kind of to take off in the coming years as these projects comes to market. So I think that's the second one. I think the third one is scaling. So how do we bring in the next billion people in the crypto assets? And we need kind of the scaling solutions to do that. And those are coming to the market now. Roll-ups on Ethereum and other technologies are bringing that to the market. So that's also very exciting to see in this bear market.
And finally, Timo, if you could help us predict the future and get the final word.
Right. Well, I mean, I think the early adopter market is kind of coming hopefully towards an end. And so all these, like, if you're a crypto degen, you know how to do all these things, but we can expect the world to take on that behavior. So I think, the next phase is to move beyond early adopters to really a kind of an early mass market, and that involves like retail using these things without, not even like knowing that there's like a blockchain powering some of this stuff, which we've already seen with some of the NFT related stuff, right? I mean, it's like, there are behaviors where people really don't care if it's an NFT or whatever, it's 7211155. I have no idea. I just want to do this thing with my basketball team, whatever it is. So I think that's a great trend, and I hope that that's going to bring the billions of people onto blockchain-related use cases. And then on the institutional side, I think as already discussed, like just make sure that the products that are out there actually make financial sense from all the different kind of aspects, and that the infrastructure is kind of sufficient to support what the needs are for institutions to come in. So that's kind of trying to paint the bright future. And if all of those things are true, then we're off to the races.
Yeah. So look, I think those are fantastic predictions. I truly hope with every fiber of my being that they all come true, especially the NFT at the end. But the other aspect that I think that we haven't touched upon is education. So I think education levels are improving. I think that the thing that I've noted as part of this winter is there's been a cross-pollination of crypto talent that are making their way into regulatory authorities. So changing the mindset from the inside out, which also may help to perpetuate greater adoption in the future. So Timo, sorry, I did promise you the last word, but I got a word in edgewise as well. So look, thank you so much for the time and sharing your expertise across this panel. I do think that there are new things that we came away with, and I think that the predictions that you've made will also hopefully come into fruition next time we're here in Singapore at DA Week. So thanks very much for your participation, and thank you all for listening.